What in the world is going on with cryptocurrency? It's been crazy town the last week, almost last 2 weeks. Seems like ever since Elon went on SNL, we saw Dogecoin spike down. Now we're seeing Bitcoin spike down, Ethereum spike, like everything is spiking down. I mean, it has been literally insane. What's going on, y'all? Welcome back to the channel, Wealth Hacker Labs. Jeff Rose. I am your grateful host. And what I want to talk about today is not so much like the craziness that's going on in the Bitcoin space, crypto space, but also just bringing your attention to, I believe, is one of the greatest tax advantages, one of the greatest tax hacks that you get with cryptocurrency. All cryptocurrency, whether it be Bitcoin, Ethereum, Cardano, Dogecoin, whatever it may be, this is by far one of the greatest tools that if you use it right, you basically may never have to pay any tax on cryptocurrency. And full disclaimer, like I wasn't fully aware that this rule existed for a while and haven't really taken advantage of it until recently. But it is by far, once again, it is amazing. And we're going to talk about why it's so amazing and how you could actually avoid paying tax. Also, full disclaimer, I have another video that's coming out very soon. It's being edited at the time of this recording that goes more into basic cryptocurrency tax questions to help you. And I do touch upon this at the end of that video, but I wanted to spend a little bit more time doing a deeper dive while that one is still in the editing queue. So what's going on? So here we can take a look at Bitcoin right now. Yeah, at the time of this recording, it is 11 o'clock my time, Central Time, May the 20th. So Bitcoin is back above 40,000. But as you can see here, I mean, it got down in the low 30s. I mean, being the fact that check out this chart. I mean, this is where we were not too long ago. You know, we were in the 60,000s. I think the peak was 63 there. So there's 63 there, and that's where we are now. So we're hovering around 40,000. I'm still mostly positive. There are a few purchases recently where I picked it up at around 50,000. So on those purchases, I'm not very happy. Like, that's not fun. Like, I don't want to be down 10 grand per coin on those purchases. So this is where this rule, this tax hack comes into play. And what this rule is, and some of you are probably already familiar with at least the concept. So the concept is what's called a wash sale. And for the most part, like wash sales are it's a common thing. So how a wash sale works is if you buy, let's say if you buy a stock. So if you buy a stock, and let's say you buy Tesla, since we're talking about Elon. So you buy Tesla and you buy it at, say, $700. So you bought it at $700, and then a week later, 2 weeks later, it goes down. So now the stock that you paid $700 is worth $500. Well, you could either hold, which, you know, many people do, or you could sell, lock in a loss. So now you have a loss. And let's say it's the only loss that you have for the year. The IRS only allows you up to $3,000 on a capital loss for the year. So $3,000. That is if you don't have any other gains, which we'll talk about more here in a second. So you got that loss. You bought Tesla at 700, you sold it at 500. Now you got that $200 loss per share. Well, all of a sudden, you know, but you still like Tesla. Like, you still think that Tesla is going to make you a lot of money. So you don't want to sit out of it too long. So you decide, oh, I'm going to buy it a week later. And all of a sudden it starts going up. You're like, awesome. I locked in a loss and I bought it at a great time to where I can capitalize on this gain. And now, you know, I can offset future gains with that loss. Well, this is where the IRS steps in and says, that doesn't work. That's what is called a wash sale. So if you buy a stock, if you buy a security and you sell it at a loss, you cannot buy that same stock for up to 30 days, 31 days basically. You have like a month and a day before you can get back in. And I don't care how sneaky you want to be. You know, if you have it in your Robinhood account and you decided to you sell it there and you buy it in your M1 Finance or TD Ameritrade or wherever you buy it, the IRS is still going to know, and they're going to negate that loss. So you cannot take advantage of that loss. That is the wash sale. So with cryptocurrency, this is where it gets really fun. So here is an article, and I'll have a link to all of this, or links to all of this in the description so you can check this out. So he is talking about here, the author is talking about a tax loophole that every crypto trader should know. Before I even share this, let me just go ahead and just say this real quick. I have to say this so we can get this out of the way. This is not tax advice. Yes, I am a certified financial planner, so I have that designation. I am not a CPA. I am not a certified public accountant, and I do not want to come out as a tax expert. If you have cryptocurrency and you're interested in investing or purchasing it and taking advantage of some of these tax strategies, please see a tax professional. All right, that is my disclaimer. All right, so going back to this article here, he goes on to just talk about with cryptocurrency, one of the advantages that you have. So he goes into talking about the wash sale, which we were just talking about with the buying Tesla stock. But then he goes on to share about with cryptocurrency, how this doesn't apply. This doesn't apply. So why doesn't this apply? So let's go to the IRS.gov website. I know many of us have gone here, especially with the whole stimulus check, trying to figure out where our check is. Well, we're going here for a different reason. So if you go to IRS.gov and you can search, type in virtual currencies or cryptocurrency, and this is the main page that comes up. This is their, I guess, all-encompassing everything on virtual currencies. And then if we scroll down, we go to IRS Notice 2014-21, which I have opened here. And let me highlight this tab. I want to make sure that I'm going to move me out of the way so you can see. Go to camera 2 here. All right. So if we go, let me make this a little bit bigger. I want you to see this. So if we go to the FAQ section, and then we go to question number 1. How is virtual currency treated for federal tax purposes? This is a big deal. And then it goes on to say, for federal tax purposes, virtual currency is treated as a property. Is treated as a property, not a security, which is a stock. That is a big deal. So why is that a big deal? Because cryptocurrency is treated currently by the IRS as not a security and as a property. That means that the wash sale rule does not apply. It does not apply. That means if, I'll use me as an example. I want to use you as an example. You got into Dogecoin and you bought it when it was at 50 cents, and right now, I guess I should pull up Dogecoin. Dogecoin's at what? 35 cents, 40 cents, whatever it is right now. I'll pull it up real quick. Dogecoin doesn't give me a price. Of course it doesn't. Whatever. You know what it is. So it's down what you paid. You're like, oh, well, do I want to sell it or do I want to keep it? Well, you can sell it, lock in that loss, and then now you can have that loss to where if you ever sell it later on, you can basically subtract the losses that you locked in from any future potential gains. Like, that is a big deal. So right now, just so we can all be on the same page, the Dogecoin right now is trading at 39 cents. Oh my gosh. And then you can see the picture of the guy there at the top right. He is, I know he was featured on Graham's channel, also with Kevin's channel, and I think CNBC just did a write-up on him. I don't know the guy yet. Every time I see the beard and the hood, it kind of freaks me out. I'm sure he's a good dude. Anyway, Dogecoin at 39 cents. So if you bought it at 55 cents, 60 cents, and you're still holding, well, you can sell and get right back in. So you've locked in that loss. So if you do sell it, if it does go back up, now you can minimize how much tax that you pay. And there is some concern. Okay, well, yes, that's what it's saying. I mean, it says here, right? Treated as property. And there has been other people that have spoke. So this is former SEC Chairman Jay Clayton, and he says, quote, that Bitcoin, I said quote, I want to make sure I actually have his direct quote. He says, Bitcoin is not being a security, does not mean it should be regulated. So he's basically, so there's this whole thing with Ripple, that's a whole other story. But basically, he came out and said, is that as of right now, Bitcoin is not treated as a security by the SEC. Could that change? Sure, it could change, but as it stands right now, it is not a security. So that is a big deal. It's a huge deal, huge deal. So, and you can type in other stuff on cryptocurrency and all that good stuff and see, how that all plays out. That is a big deal. So let's talk about this in practice now. So as I mentioned earlier, and I did a video on this not too long ago showing like my cryptocurrency holdings. So this is my Coinbase account right now. And this is, don't use that number here because that's what I transferred in 100 grand, which I then transferred out to BlockFi. So this is where I was not too long ago, 245, 250, 269. I'm loving life, right? I am loving life. And I mean, you can see where we're at now. We're at 196. We got down to 158. Oh my goodness. I'm glad I did not log in that around that time. 158. So that's almost $100,000 drop. Whew. And that's going what? May the 10th. Let's just go even May the 12th to the, oh wow. That's like 7 days. Wow. To lose 100 grand on paper in 7 days. That's never fun. So how this plays out, in practice. So I can pull up, here's my Bitcoin, and we can see, where was it? Somewhere here I bought that one. No, not that one. Sorry. Oh, sorry. I did it in my BlockFi account. My bad. I bought it in my BlockFi account. But either way, if you could see, like if I had a purchase of 50,000 on Bitcoin, so I could sell it today, lock in that $10,000 loss, and now get right back in. Or if I want to get into Ethereum, whatever that, I don't have to get back into Bitcoin, but if I wanted to, I could. And then if I want to sell it later on, bing, 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 guess what? Now I have a loss that I don't have to pay. And the one thing I will say is like the concern I had was with all of this is like, well, how do you know? Like, how do you know? Like one thing, let me also say, the one thing you do want to be careful on is with, if you're buying it with Robinhood in particular, because since they don't hold cryptocurrency in their own wallet, Robinhood, and actually I should pull that up so you can read this. Robinhood falls and they use what's called a LIFO tax method with everything that they do. So I'm sorry, I'm saying that backwards. They do FIFO. First in, first out, FIFO. First in, first out. Let me show you so you can see. This is on their site. So Robinhood uses a first in, first out method. Why that could be a big deal is if you bought Bitcoin, let's say you bought Bitcoin a year ago, 2 years ago, and it was much lower, and that is still hot. So you still have a gain on that one, but you decided to buy it again. And you bought it where it, say you bought it at 50 and now it's at 40. And you're like, oh, well, I want to lock in that loss on the one that I bought later on. Well, with Robinhood, since they do FIFO and they don't hold their own cryptocurrency, you can't specify which one that you want to sell. That is a big deal. So be careful with Robinhood just because of the way that they do it. Now, with other cryptocurrency exchanges like Coinbase, BlockFi, etc., you can go in and you can see when you bought it. You also have a way that you can specify which one that you bought. So if you have a Coinbase account or if you have a BlockFi, you can go up to here. You can go to taxes and reports, and then you can pull up your transaction history. And you also have the ability to use a crypto tracking software, crypto tax software. Now, I will say, full disclaimer, I don't have one of these yet. I am looking into them. I did like a quick search for like crypto tax software, even though I can't spell tax. So you have cryptotrader.tax. You've got Even TurboTax does something with cryptocurrency. You've got tokentax.co. You've got TaxBit. You've got Coinly.io, and I'm sure there's others here. I don't know much about with crypto coin tracker, I guess, and that could be a good one. I don't know. I'm not familiar with them, full transparency, but you could then also pull up your transaction history here. So generate a report, pull up a PDF, which I did here, so I can go in and I can see all of this. And I say all this because if you are trying to specify when you bought your Bitcoin, when you bought your Ethereum, whatever that is, you want to try to have all that transaction history as much as you can. Otherwise, you're using a guessing game. If you're using like a Coinbase or a BlockFi or some of these major crypto exchanges, you should be able to pull that information. If you're, I don't know who else there would be, these are the only ones I have right now. I do have a Gemini account, which I've not done anything with them quite yet. You should be able to get all this information. But if you're using some sort of rogue, a crypto exchange, it might be more difficult to get this information. But that way you can specify, hey, I'm selling, because with me, I bought Bitcoin when it was, I think, 3,000. I bought again when it was 7,000. Bought again when it was like 20 or 30,000. And I have a few times where I bought it at 50. So when I'm selling these, I want to make sure that I'm selling the one at 50, not the one at 3 or 7. That is a big deal. So in summary, this is a major, major tax hack. I mean, you talk about if you are doing this right, locking in these losses with the gains. Obviously, you got to make some money to have some gains later on. But if you truly are a holder, a hodler on crypto, and you buy it now, lock in a loss, and jump right back in, it's possible that you may never have to pay any tax, or you are minimizing paying any long-term or even short-term capital gains, which is a big deal. All right, y'all. Make sure, once again, you seek a tax professional. But yeah, this is why I love crypto. You get something here that you don't get with any other security. This is a cool deal. If you enjoyed this video, found it helpful, you know what to do. Like, subscribe, do all that fun stuff. This is Jeff Rose, reminding you, as always, it's your money, it's your life, and all you can make it awesome. Until next time, peace.